Managing an investment portfolio is a dynamic process, not a one-time task. Over time, various factors, such as market fluctuations, changes in your personal financial situation, or shifts in your investment goals, can throw your portfolio off balance. Rebalancing your portfolio regularly is essential to maintaining your desired risk tolerance, asset allocation, and long-term financial goals. However, it's not always obvious when it's time to make adjustments. Here are the top 10 signs that indicate your investment portfolio may need rebalancing. 1. Your asset allocation is no longer aligned with your goals. One of the clearest signs that your portfolio needs rebalancing is when your asset allocation no longer matches your investment objectives. For instance, if your original plan was to maintain a 60% stocks and 40% bonds allocation, but the performance of your equity holdings has led you to a 70% stocks and 30% bonds ratio, this might increase your risk exposure beyond your comfort level. Similarly, if you're nearing retirement, your portfolio might need more conservative investments to reduce potential volatility. 2. Significant changes in your risk tolerance. Your personal risk tolerance is a critical component of your asset allocation. However, as life circumstances change, so too can your tolerance for risk. Major life events such as marriage, having children, receiving an inheritance, or nearing retirement can alter your risk profile. For example, if you were once comfortable with a high-risk portfolio that emphasized growth stocks, but now you prefer stability and income, it's time to shift your investments toward lower-risk assets, such as bonds or dividend-paying stocks. 3. Your investment goals have changed. Investment goals often evolve due to shifting financial priorities or life changes. For example, if you initially built a portfolio to fund your children's college education but are now focused on saving for your retirement, your investment strategy might need to shift. Similarly, a change in your timeline for achieving a goal could necessitate a portfolio adjustment. Rebalancing ensures that your portfolio supports your current objectives and timeframe. 4. Some investments are significantly overweight. Even though the value of certain assets in your portfolio might be increasing rapidly, this can inadvertently cause an imbalance. If a particular sector or asset class has performed exceptionally well, such as a surge in tech stocks, it might now represent a disproportionate share of your portfolio. If these assets become too large a portion of your holdings, it could expose you to higher risk should the market experience a downturn. Rebalancing helps to prevent overexposure to any single investment, ensuring better diversification. 5. You haven't rebalanced in a while. Even if you haven't noticed any drastic changes in your portfolio, regular rebalancing is necessary. Financial markets and your investments are always fluctuating, so leaving your portfolio unbalanced for too long can lead to a drift away from your original asset allocation. It's a good practice to review your portfolio at least once a year to ensure that it remains aligned with your goals. Annual rebalancing allows you to take profits from high-performing assets and reinvest them in underperforming areas to restore balance. 6. Market volatility has increased. Periods of high market volatility, such as those caused by economic downturns, global events, or financial crises, can lead to significant changes in the value of assets in your portfolio. In such environments, some investments may underperform while others overperform. If market volatility has been especially high, it's essential to reassess your portfolio to make sure you are not overexposed to riskier assets. Rebalancing during volatile periods can help you regain stability and keep your portfolio on track with your financial goals. 7. Your portfolio has become too conservative or too aggressive. As you get closer to your financial goals, such as retirement, the balance between risk and reward should shift to reflect your changing needs. If your portfolio has become too aggressive and you're now facing more volatility than you're comfortable with, or if it's too conservative, leaving you underinvested for growth, it's time to take action. The ideal balance is one that continues to offer growth potential while managing risk according to your timeline and objectives. 8. You have unused cash in your portfolio. Sometimes, cash can accumulate in a portfolio due to income from dividends, bond coupon payments, or just from funds not yet reinvested. While holding cash can provide a cushion in case of emergencies, it can also detract from your portfolio's overall performance, especially in a low interest rate environment. If you have an excessive amount of cash sitting idle, it might be time to rebalance by investing the funds into growth or income-producing assets according to your allocation. 9. New investment opportunities arise. The financial landscape is always changing, and new investment opportunities can arise that are in line with your portfolio's goals. These could include emerging markets, new sectors, or even alternative investments such as real estate or commodities. When new opportunities arise, it's important to assess whether they fit into your portfolio's long-term strategy. If they do, it may be time to rebalance your investments by adding these new opportunities while trimming areas that no longer align with your strategy. 10. Tax implications of your portfolio. Tax efficiency is a key consideration in portfolio management. Over time, tax laws change, and certain assets may generate taxable income or capital gains that can affect your portfolio's performance. If your portfolio is producing significant taxable income, it might be beneficial to rebalance by shifting investments to tax-advantaged accounts or tax-efficient investments. For instance, you might want to increase the proportion of tax-deferred assets in your retirement accounts or invest in municipal bonds to reduce tax exposure. Rebalancing your portfolio is an essential aspect of maintaining a well-managed and diversified investment strategy. The process ensures that your portfolio remains aligned with your goals, risk tolerance, and financial timeline. By recognizing the signs that it's time to make adjustments, whether due to changes in your personal life, market conditions, or shifts in the performance of your assets, you can stay on track to achieving long-term financial success. Regularly reviewing and rebalancing your portfolio is a proactive approach to ensuring your investments continue to work effectively for you in any economic environment.